welcome to Scrolling with Ceazor. Today is May 27th, 2026, and as usual, I've got lots of news for you today, a lot of tweets to talk about. But before we get into those, this is not financial advice, but let's take a look at the charts. So here we have everything looking pretty red today, except hype is up about 0.5% today. Sonic is up less than 0.5%, and so forth. Things are looking okay, though. It's not too gloomy and scary. It's just normal crab itch type stuff. Okay. So yeah, so you can check these out and decide whether or not you want to make any movements or make any actions. So forth, and that's about it. Let's get into the tweets. So the first tweet I have today is about this video I did the other day, Bounce Tech. Now it's a leveraged long tokenized leveraged long and short platform where you can just simply buy some tokens that represent leverage longs and leverage shorts on positions. It's on Hyperliquid or Hyper EVM. You can check out this video that I did yesterday. I found some tokens inside my wallet. I don't recall why I got them, but I made this video because I was like, what are these tokens? And I did some research and I thought it was cool. So they reached out to me and they're like, hey, you want a reference link? So I'm like, sure, why not, right? So I put a reference link here, and I will also add it to my own site, this one here. Up here, links. Here I have a bunch of referral links if you want to check out some of the protocols that I have referral links to. This is an ongoing thing, so you can check back regularly to kind of decide whether or not you want to support me by using some of my referral links. Moving on. So Frax Finance has a tweet here about Frax Finance using Aave v4. So there is a current governance vote to increase the incentives because the cap. So let's just take a look at what it says. Last week, the caps quickly filled. So, they put some the incentives on the Aave v4, the caps quickly filled, and now they want to increase, Llama Risk wants to increase this cap again from 10 million to 20 million. So it's fantastic to see Frax Finance's FRX stablecoin growing. As I always say, it's my traditional finance stablecoin of choice. I would much rather use Frax FRX USD than USDC. If I could everywhere, I would. But anyhow, so that's that. You can check that out and decide whether or not you want to take part in that if you can get in there before the caps get filled. Okay, so here we have 0x Farmed. Am I following this guy? No, I'm not. So I'm going to give him a follow, because he's got a tweet out here. He's done some research on the borrowing rates of Liquidity Protocol versus some other protocols like Morpho, and he's saying it's significantly cheaper to borrow stablecoins on versus ETH versus BO versus WST ETH and versus Rocketpool ETH. Yeah, so you can read through his tweet here and get his whole debate here. There is one thing missing that I think is significant as well, is that like Liquidity Protocol's very isolated. So you're only isolated to these things. Now on Morpho, if you can find a market that only has like RETH versus USDC, then maybe you can borrow. But then there's so much isolation that the borrow rates can fluctuate quite significantly on Morpho, whereas the borrow rates on Liquidity Protocol are set by you. You decide your borrow rate. So you will never pay more. However, there are redemptions if you go too degen and you set borrow rate too crazy low. So I like to use the borrow rate managers so that they can keep me as low as possible, and hopefully I can avoid redemptions. Now I did do a video on how to make profit from redemptions. That's in my channel. You can look up Liquidity Protocol and profitable redemptions. Okay, so check it out. Moving on, here we have SoFi. I haven't done any deep research on this, and it's kind of a little bit scary to me. It's like the suit's coming in again, trying to take over our bags, take over our system. But anyways, I don't know. I probably should look deeper before I comment on it. But this is my instinct or my gut feeling when I first see it. I would much rather use Frax than use this thing. However, what is it? Okay, the first stablecoin issued by a U.S. national bank and redeemable 1-for-1 for cash or cash equivalents, rolling out now. I think someone said it's like $100 million starting right off the bat. So yeah, that's happening. People are happy this is happening. I'm a little bit skeptical, but it is there. So it's news. It's definitely newsworthy. Okay, moving on. So Blockworks introduced this thing called Transparency Alliance. So all of these projects, you can like kind of pause, look through all of these names. They're all here. They're all committed to a transparency framework, which is pretty cool because then like it'll be easier for users to verify who's what and what risks they're taking where if everybody is giving the same data format. And then, someone can aggregate this data, someone can assess this data more easily. And then with AI as well, you can quickly compare the security risks of different projects that are, fully transparent using this transparency framework. Now, I haven't looked too deeply into this. I'm going to wait for the experts to look deeper into this and decide whether or not this is all just like fluff or whether or not it is actually useful data and so forth. But I thought it's significant and worth sharing. Okay, today I want to talk a little bit about Rameses again. I really like this protocol, and there's one thing here that they did that is very elegant and very beautiful. Okay, so every time you convert RAM into XRAM, you're burning 50% of the RAM. Now, it doesn't matter. Like, if you think of it this way, like the idea as a user, if you convert to RAM and then you want to convert, to XRAM, and then you want to convert back to RAM, then you commit to burning 50% of your tokens. So when you convert back, right? However, what Rameses did is they put the burn function on the mint. So when you mint the XRAM, then you get 1-to-1. So if you put 100 RAM, you get 100 XRAM. However, that RAM is immediately burned, and then the protocol then can show that the burning has happened already, instead of waiting for when people start exiting, because like I'm not going to exit my XRAM, I'm going to leave it there and just farm the dividends, so to speak, right? And then I could always sell the XRAM too on the open market or OTC or put some limit orders if I wanted to, right? But the point is that like they don't wait until people start to redeem to burn the tokens. They burn them immediately because they're going to get burned eventually, or they will never get burned. But like those XRAM will either eventually get redeemed, or they will just stay there. So you might as well just burn it, right? Burn it now, and then you can have a steady burn every time some people are converting. I think it's fantastic. It's very elegant. It's very simple. It doesn't change anything for the user, but it makes the burning more predictable and more consistent and more often. Okay, moving on. Here we have Flying Tulip. Flying Tulip has added their own stablecoin as Lend on their platform. Check into here. There's some parameters you need to be aware of. Like you need to have the minimum margin has been reduced from $2.50 to $10. The minimum repayment amount is from $10 to $2. Do some research on this, but I thought it was significant to show that like Flying Tulip is continuing to deploy and build and grow and so forth. Now I've got bags of Flying Tulip tokens, and I also have some FUSD farming more, so I'm a little bit biased on this thing. But anyhow, that's that. Okay, so here we have Lefteris and Token Bryce talking. They had a conversation here. I did comment on it. My comment's not showing here. But basically he's saying like, there's all these exploits lately, but a new exploit almost daily, but it's almost all like compromised keys, right? Just compromised keys, right? And Token Bryce says we should be calling these something different than DeFi exploits, right? And I agree with him. Like it's not really an exploit, a DeFi exploit. It's It's a human exploit. Like they exploited a human, right? So I agree with these guys on this, and I thought I would echo it. And I did do this tweet today to someone else, which is along the same theme. Today's like popular news is this guy here, Manuel, who is the founder of Open Zeppelin. He's saying that like he now considers all DeFi unsafe because AI agents have superhuman abilities to find vulnerabilities. So I retweeted this. It's not his exact tweet. It's kind of like the news. It's kind of like what's popular today on X. So I retweeted it and I tagged him and I said, with all due respect, like obviously he's a better coder than me and a much more capable dev, right? So with all due respect, most of the recent exploits of significant are not due to AI finding holes in code, rather to admins getting STDs. Now that's basically I'm saying the same thing. They're admin keys. They're tempted by greed or some other thing, and they give up their they give up their keys, right? They get exploited by social exploits. Moving on, so here we have Primal Glenn. He's shilling Carbon DeFi, which is, in my opinion, this is like top 5 of all protocols on DeFi. It's just so useful. I use it all the time. I have so many positions open on it. It's so fantastic. So he's just kind of sharing what are some of the things you can do with it. You can pause and read it, but I think the key thing here is you can open 2 range orders. So you can say, I want to buy this token when the price goes between here and here. And then I want to sell this token when the price goes way between here and here, so way above, right? So you can kind of go in and out of tokens quite easily as the price bounces through those ranges. Of course, there's prediction. This is trading. You need to adjust your levels. You need to find those points where you think trading will happen. But then you don't have to be perfect, right? And you can adjust them. Everything can be adjusted without opening and closing the position. You can just adjust the fees, adjust the ranges, adjust the spread, adjust like how many tokens are inside. You can withdraw some of your tokens. You can put more in. You can put more into one side or the other side. It's just so useful and so fantastic. I wish everybody would just try it out and use it, and it would just be fantastic. So anyway, you can check out this tweet and get more information. So we talked about exploits today. So apparently, so this happened. StakeDAO VSDCRV was exploited on Arbitrum, a whole bunch of minted tokens. As far as I can tell, it's also a compromised private key. So somehow, the hackers got control over the wallets that has the power to mint a bunch of these tokens, and then they minted them and started, doing the extraction of their value. So again, this is not a smart contract exploit. This is some sort of, private key exploit. I don't know exactly what's going on. I need more information. But again, layer zeros, OFT tokens, somehow they got control over that, and they started minting and on Arbitrum and just going about. I don't know. I haven't seen what they did with the tokens. I'm not sure if they started selling them or using them as collateral. It doesn't matter really. But anyhow, so that happened. So here I have privacy pools. I'm still trying to get a better picture of this, but it's time for me to do my podcast. So here I am. So they say privacy on Ethereum can scale with high fees. That's why we've made deposit free on privacy pools. So so I asked, is this only just on mainnet? And they replied, all pools that offer yield. And I said, you mean pools like this that have incentives? And he's like, no, not incentives. There will be a private in-pool yield offered for many pools. So those pools will have 0 deposit fees as a result. More details to follow. Okay, so some sort of, rehypothecation of yield of tokens or something for some yield. I don't know, but anyhow, significant. You can, if this goes live, you can take a look at it and you can privatize your tokens for free, as long as we understand it. Once I have a better understanding of this, I will explain it as I understand it, and maybe even do another privacy pool video. I do need to do one pretty soon because they are dropping new features on privacy version 2. So maybe I will take a look at this and see if there's a documentation on this soon. Okay. Last thing I want to talk about today is this Wallet Chan. Wallet Chan now fully supports EIP 7702. So supercharge your existing EOAs with smart accounts. So no more dangling ERC approvals. So yeah, if you use this, basically you can convert your wallet into a smart contract wallet, so kind of like a safe. You can do all kinds of cool things in here. You can delegate some powers. You can, bundle transactions. You can do all kinds of stuff like this, swap and bridge. Also supported. So yeah, no approvals needed anymore if you're using this wallet. I don't use this wallet, but I keep thinking I should try it, and I just don't. I got to make money, so I gotta go hunt down farms and yield sources. So I keep getting lazy. But anyways, that's that. You can check that out and see if this is something you want to give it a whirl. So that's it for today. I hope this has been interesting, useful, and thank you for listening, and goodbye.